When Chicken Little got hit on the head with a drop of rain, she ran around screaming, "The sky is falling, the sky is falling." Does that sound familiar? Today, I see the same thing happening on YouTube every day. Only instead of the sky, people are warning that the market is crashing. A little uptick in inventory, and suddenly, it's panic time. But here's the truth. Not every rise in inventory is a crash signal. In this video, I'm going to share the 3 true indicators of a real estate market collapse and show you exactly where we stand today. Spoiler alert, I don't believe the market is a bubble about to burst. Now, I'm not an economist, but I do follow the research of some of the most respected economists in our industry. I read their reports and I study the trends. More importantly, I've been an independent broker for over 32 years. I've lived through multiple real estate shifts, and I've learned to spot the warning signs of a crash long before it happens. And when I say crash, I mean a real crash. A 20 to 30% drop in home values. In the past century, it's only happened 2 or 3 times. First, the Great Depression. Second, the savings and loan crisis in the 80s. And of course, the Great Recession from 2006 to 2009. And here's the key. In each of these crashes, 3 specific conditions appeared together well before the market actually collapsed. The first sign is an extreme imbalance between supply and demand, specifically high supply with low demand. And right now the national inventory trend is rising, but last quarter we averaged 1.54 million homes for sale nationwide, and that's slightly above the pre-pandemic levels. Today, we're a little less, 1.53 million, a slight dip, but I do expect those numbers to tick up again once July and August data is fully reported. Now, to put that in perspective, during the Great Recession, inventories peaked at over 4 million homes, and those numbers had been climbing for years before hitting that level. That's the kind of oversupply that puts serious pressure on prices. So if I'm looking at signs of a collapse, I'm checking boxes, and right now I can't check the inventory crisis box. Our supply is healthy. The second sign is when banks dominate the housing market. If foreclosures are driving sales, prices will drop because banks are unemotional sellers. They care about the bottom line, not holding out for top dollar. Today we have about 187,000 homes in foreclosure. Compare that to 2008 when we had 1.65 million. That's a massive difference. Looking ahead, only 3.2% of loans are delinquent right now, well below the pre-pandemic norm of 4.13%, which was already considered healthy, normal, and stable. Bottom line, foreclosure activity isn't anywhere near the level that it could trigger a market collapse, and that's another box I just can't check right now. The third sign is buyer activity. And this is the one area showing a little bit of a wobble. Since 2020, mortgage rates have jumped from record lows in the 2s to over 9%, and now they've settled into high 6s, low 7s. This has slowed buyer activity, to be sure. But here's the thing. Demand hasn't disappeared. It's just on hold. There's a lot of pent-up demand that could surge if rates drop into the mid to low 6 range. That would push values up, not down. And you might be wondering, if buyer activity is soft, why aren't prices falling faster? And the answer is simple. Homeowners today are in a very different position than in 2006. Back then, millions were underwater, owing more than their homes were worth, and they had no choice but to sell or walk away. Today, we have the strongest homeowner equity position in history. Most people have low fixed rates and can afford their payments. They're not desperate to sell, and if they don't get the price they want, they'll just wait. That prevents the kind of panic selling that pushes prices into free fall. So here's where we are. Inventory is healthy. Foreclosures are minimal. And while buyer activity is a little sluggish, it's not a collapse signal. All three crash indicators are far from lining up in perfect order, and that's why I'm not buying into the panic. The sky is not falling, and neither is the housing market. If you found this breakdown helpful, hit that like button, subscribe, and drop a comment below telling me your thoughts. Do you think we'll see a crash? Or do you agree that this is a very different market? I'd love to hear from you. I'm Frank Spencer, Mr. Chatsworth, and I'll see you around the neighborhood.